Bitcoin's growing at less than 1% and long-term grows to zero. So should we expect Bitcoin to outperform gold by, 1% a year? No, because we have a total addressable market in mind for what Bitcoin could be, or at least a range.
In a
And
fascinating chat, podcaster Walker and well-known investment expert Lyn Alden delved deeply into Bitcoin's revolutionary potential to change global economies. Alden examines the intriguing notion of countries building up their Bitcoin reserves as a strategic weapon to promote commerce, address economic imbalances, and open up new financial opportunities, rather than merely using them as a hedge. She believes that Bitcoin might be a game changer for chronic trade deficits. Her research is a wake-up call for investors, policymakers, and anybody else monitoring the profound changes in global finance. It goes beyond simple theory. Alden also examines Bitcoin's potential to become a neutral reserve asset that could unseat gold and calm the chaos that comes with holding the title of world's reserve currency. If Bitcoin solidifies its position in the global monetary system, ripple effects will be felt across economies, currencies, and power structures worldwide. This could lead to nothing less than a financial revolution. In addition to providing insights, Lyn Alden also provides a blueprint for the future. Disregard it at your own peril. To learn more, let's watch snippets of her interview. Thank you for returning, and please remember to like, subscribe, and turn on notifications for more in-depth information. Take pleasure in the video. 2.
Money.
yeah, I think obviously there are multiple assets that can benefit. Bitcoin, I think we would generally agree is like the best way to do it because you get the absolute scarcity mixed with the fact that it's a young asset. If it was just looking at relative scarcity, we would say, okay, gold's growing by 1.5% a year, Bitcoin's growing at less than 1% and long-term grows to zero. So should we expect Bitcoin to outperform gold by, 1% a year? No, because we have a total addressable market in mind for what Bitcoin could be, or at least a range. And we think that a $2 trillion market cap is so small relative to what it could reach. So in addition to merely protecting against debasement, which is kind of what gold's doing, it's actually growing into whatever it's going to become. So I think that's the bullish thesis. And one way I kind of look at any investment is through the lens of market share and dilution. So if you're a holder of the dollar network, there's different instruments to do it. You could hold a bank account that pays you zero, a bank account in a smaller bank that pays you maybe 3%. Could be holding T-bills, getting a little bit more. And you have to compare that to like the structural growth rate of the dollar supply, or all monetary aggregates. So dollars plus, say, treasuries, for example. You can map it in multiple ways. And you always ask, is my share of the network, if I just hold, so factoring out my new income, because we're just talking about investing or saving, what percentage of the network do I have now? And in 5 years, will I have like less of the network just by holding and collecting any sort of payments I might be owed versus not? And so if you hold dollars and the money supply grows 7% a year and you get paid 4% a year, you're going to end up with a smaller share of the dollar network over a given 5-year period. And same thing with true as gold, except your debasement rate is something like 1.5% per year. But then you also have to ask, is the thing you're holding increasing its like market share compared to other things? So for example, someone could hold IBM stock and they're buying back shares. So you're holding a deflationary asset, which sounds good, but then IBM's getting its lunch eaten by all these other tech companies. And so the market share...
According to Lyn Alden, nations commonly devalue their currencies by accumulating reserves that can be used to defend the currency if it weakens too much. She also pointed out that the current dollar system, which keeps the dollar strong, has certain disadvantages, such as the need for the U.S. to run a structural trade deficit and inject dollars into the global economy. This creates a self-reinforcing loop in which everyone in the world seeks dollars, leading to the currency's perpetual overvaluation, which has detrimental effects like increased import power, but decreased export power for lower margin goods and services. Alden also discussed the idea of a Bitcoin reserve, arguing that it could be used to support the dollar in times of crisis. She claimed that hoarding Bitcoin could make U.S. exports less competitive and aid in the restoration of manufacturing jobs, and that the U.S. should implement a system akin to this to acquire Bitcoin, providing the government with alternatives in the event of a future crisis. Let's check other interview snippets.
Of relevant tech for any one IBM share is decreasing. So when I go back to Bitcoin, the main question I look at, okay, what are the monetary dynamics of the network? So we see the very low inflation rate and the hard cap and all that. Then the next question is it the best at what it does? And will it continue to capture market share in its like industry or even adjacent markets? And I view yes. So as long as I see nothing on the horizon that I view as disruptive to that trajectory, then I expect both from the scarcity dynamics and then the fact that it's the leading, liquid, secure cryptocurrency, and then it's better than gold in many ways. It's better than the bond market in many ways. It's as more people learn about it, the rational thing is for them, some subset of them to want to buy it. That I generally view as yes, that's structurally bullish for Bitcoin. And the only time I might be more cautious on it is if it's, we get a crazy euphoric spike. You can look at different metrics like market value to cost basis or something. And then I say, well, okay, now I think it's going to go higher, but maybe it's going to take a 2-year break or something, right? So there are certain moments I could be more cautious, but as long as I think the structural things are in place, I'm bullish. Yeah, I agree with all those points. I would make a couple other observations that in any given big company, there are Bitcoiners, like at the vice president level, they'll there's a lot of people like that in companies, and it kind of doesn't matter until they're majority, right? So like if you have like 9 board of directors and like 4 of them like Bitcoin, it doesn't really matter till you hit 5, unless the CEO or the one with disproportional voting rights is the one that gets it. So if it's Fidelity or MicroStrategy, you can be super early because it's top down, whereas bottom up inherently takes a long time, but then it's like gradually and then suddenly. And I still think it's going to be a minority of companies this cycle that do it out of of course, the thousands that exist. But they are popping up more frequently now. I think the accounting changes were a big deal. I think another thing is just seeing another cycle. So a point that I made before is that when someone sees like 3 cycles, not that there's been 3 cycles, but that they've seen 3 cycles, that actually matters. And for a lot of people, the first cycle they saw was 2017. And then, because most people have not actually looked at the logarithmic chart or of Bitcoin, or they discount some of the earlier small cycles as irrelevant. But the 2017 cycle, the 2020/2021 cycle, and now the current cycle is kind of 3 cycles of higher highs and higher lows that are all in public, really, if you discount those earlier cycles. And there's only so many times you can kind of say, well, that's a bubble, and then it's dead. Oh, that's another bubble, but that's only because of COVID money printing. And then it's like, oh, wait, it's back again, despite, high interest rates. You can only dismiss it so many times before you say, well, maybe I got to reassess. So I think that's another factor that's kind of mainstreaming it. And then I did a piece, I called it a new look at, what did I call it? A new look at corporate treasury strategy. And I analyzed kind of why this is relevant. And among assets that corporations can hold, there's kind of a hard cutoff, which is anything that you expect to underperform your equity, you can't really hold in scale. Like obviously you hold cash, even if it's going to underperform your equity because you need some cash. But you can't just like unlimited stockpile gold, because gold historically underperforms U.S. equities, ironically, roughly by the dilution rate that it is estimated to have. And so you have to kind of cross the threshold of like, okay, what is like an asset that is, going to equal or exceed your own equity, that's not another company's security. And Bitcoin is kind of the only thing at scale that has a shot at that. So it's not an accident that's the asset of choice that these companies are turning to. It's the only thing big, liquid enough, not a security, and then actually has attributes that make it a good treasury asset, at least for part of your holdings. Obviously, the volatility precludes it being too big. If you're running, if you're trying to run a certain way, you have to have cash as well. But
yeah.
Lie whether for a family business or a sovereign nation, Alden underlined that amassing Bitcoin is a wise strategy for optimizing wealth. She also pointed out that nations with substantial reserves like Singapore are more desirable to investors. Alden also noted that when Bitcoin supporters acquire the backing of key decision makers or achieve a majority within large corporations, they might spur adoption. She thinks that Bitcoin's special qualities make it a desirable asset for corporate treasuries. Meanwhile, on February 3rd, the U.S. spot exchange traded fund ETF market experienced a significant shift in investor preferences, with Ether ETFs drawing more investment than Bitcoin ETFs. Ether ETFs received a big net inflow of 83.5 million, while Bitcoin ETFs received a substantial net outflow of $234.5. 677.64 million withdrawal ARK and 21 shares. ARK became next with a $50.75,000 outflow. In contrast, Grayscale's GAP was the only Bitcoin ETF to receive inflows with 8.02 million entering the fund. Despite this, the total net assets of Bitcoin ETFs remained at $19.14 billion. On the other hand, Ether ETFs experienced strong inflows, with Fidelity's ETFs leading the way with $49.75 million. Other Ether ETFs, including Grayscale's ETFs and ETH and 21 shares ETFs, all contributed to the favorable trend, with inflows of $15.85 million, $12.75 million, and $519 million, respectively. As a result, the total net assets of Ether ETFs were $9.98 billion, just shy of $10 billion. Do you think Bitcoin has the potential to become a mainstream reserve asset for corporations and sovereign nations? Please share this video, leave a comment below, and click the like button. Thank you for watching, and don't forget to like and subscribe.